Is QUANTAS really taking off? In this presentation, we want to analyze some factors that could affect QUANTAS performance. And based on those factors, we want to show you a 12-month target price for QUANTAS stock and our recommendation. Before presenting what we consider will drive the future of companies' financial results, let's look at how the stock has performed in the last 3 years. The graph shows a clear upward trend, and the stock has gained 168% from the worst of the stock market crisis in March 2020. On the 14th of April, the last rally happened because Moody's lifted his outlook from QUANTAS from negative to stable for the first time in nearly 2 years and affirmed his investment grade. The market reacted to this announcement with a more than 7% daily increase. Now we want to focus on what we consider to are key factors in QUANTAS' future. We want to talk about sales recovery, oil prices, employee relationship, fleet renewal, and debt. Here, the main question is, when would QUANTAS recover from the pandemic? We assume December 2021 as the pandemic's bounce back, which could be the bottom of this dramatic revenue decrease. Then, the company will experience a ramp-up in revenues due to the borders being fully opened from domestic and international flights. To help project these scenarios, a non-COVID scenario was estimated. This non-COVID scenario is projected if COVID never happened. The total revenues are growing at a similar rate to QUANTAS' domestic mature segment, around 2% annually, even though the international and jet start segments have performed 9% and 4% annually between 2014 and 2019, respectively. This could be a little conservative, but who knows with certainty how this market will recover, even when several economic analysts expect a period of economic contraction, severely affecting this cyclical industry. The base case scenario is getting pre-pandemic levels in 2024, with expected revenue for the last half of the year 2024 of 11.3 billion. On the other hand, the best case and worst case scenarios achieve recovery levels in December 2023 and December 2025 respectively. The rising fuel oil price has become the #1 obstacle for airlines to get back on track after COVID-19. Fuel oil itself accounts for approximately 20% of the total operating expense of QUANTAS. The company mitigates this obstacle by introducing a hedging scheme. However, this is not a long-term solution, and the question is if the customers are willing to pay higher airfares or the company has to reduce its profit margins. Now, let's talk about the workforce. The workforce represents around 50% of QUANTAS expenses. In 2021, the company introduced a 2-year wage freeze and dismissed around 6,000 employees. The reasoning behind this move was to cut costs during the COVID-19 pandemic as a survival strategy. As international restrictions are now easing and QUANTAS is starting to recover, it faces a new challenge with its workforce, which is highly supported by trade unions, most likely demanding an increase in salaries after committing to QUANTAS' 1 billion savings plan during the pandemic. The bargaining power of employees could affect, in our opinion, QUANTAS' profit margins. Before the pandemic, QUANTAS prioritized balance sheet strength as well as liquidity. This prudent policy helped the business under pandemic situations, noted as one of the best airlines to deal with this black swan. According to its managers, the optimal capital structure to achieve the lowest cost of capital results in a net debt target range of 4.4 billion to 5.5 billion. This net debt target is aligned with investment-grade credit metrics, where the company is rated Baa2 by Moody's. QUANTAS realized that maintaining this credit rating is one of the main factors to its success, and it could be a determinant for the future of company and its expansion plans. However, the company is highly leveraged and the financial distress risk is still present. Additionally, the company is committed to investing 2.3 billion in 2023 in its new fleet and it has debt maturities for around 1.2 billion in the next 2 years. Our recommendation on this stock is based on the question, is there enough margin of safety? Benjamin Graham popularized this principle that investors should only buy securities when their market price is significantly below their intrinsic value. So let's see what we got from our valuation model. The equity value in our case scenario is 11.5 billion, representing $6.52 per share. This figure is around 20% higher than the current market price of $5.45 at the moment of this presentation. The required cost of equity was calculated using the QAN model, resulting in 7.5%. We sensibilized the sales growth scenarios that we presented previously and the required rate of return, and we got a target price ranging between $4.82 and $7. Analyzing these numbers, the upside is 28% and the downside is a negative 12%. Regarding the financial situation of QUANTAS and its challenge in coming years, we hold a neutral rating on the QUANTAS shares. Before ending the presentation, we want to point out some bullet points for an investor to consider before taking any position in this stock. On the risky side, the left side of the table, we have sales recovery uncertainty. We already mentioned the importance of sales on the valuation, so we encourage investors or potential investors to monitor sales. Then we want to highlight that this company is in a highly competitive and cyclical industry, so it depends on economic cycles, which could negatively affect the company if rates go up. Fuel prices and employee bargaining power, as we mentioned before. We also consider that the risk of financial distress is still there and hasn't disappeared even when Moody's changed its outlook to stable recently. The company doesn't pay dividends, so Australian investors are not taking advantage of benefits like franking credits. On the positive side, we can say that the management is competent, and they prove it. QUANTAS' ambitious plan for fleet renewal is a positive move. There is some room for gaining market share after some competitors shut down. Leadership in the domestic market, expansion to international markets, QUANTAS' reputation and track record of more than 100 years, and 2 competitive advantages. Its flagship brand QUANTAS offers a differentiated service, while Jetstar focuses on being the lowest cost airline. This is all we have today. Thanks for watching. Until next time.